Buy when there is blood on the streets, famously said Baron Rothschild in the 18th century. What does it mean? Well, perhaps it means it's time to diamond hands, meaning we should be buying assets that are on sale. Let me explain to you why. So Goldman Sachs today announced that they are raising $2 billion in order to buy distressed assets from Celsius. And 2 days ago, FTX CEO bailed out BlockFi and Voyager to the tune of $750 million, $250 to BlockFi and $500 to Voyager. Again, they're not doing this because of the kindness of their heart. They're doing this because it makes business sense to them. So they're buying distressed assets that will be worth a lot more in the future. They're long-term oriented. So when they're buying right now, they're buying assets that are on sale that will be worth 10x maybe 5 years down the line. And that's what you should be doing as well with blue chip crypto stuff. So maybe it's time to start layering in with Bitcoin and Ethereum. Let's take a look at the charts and I'll show you what's been happening all of this week and what I expect to happen further in this weekend. Last weekend I explained to you that there will be a flush out, and it did happen, and we bounced back to over 20,000 now. So this weekend I fully expect actually to price do the opposite now, because a lot of newly minted shorts will be squeezed to the top side. With the stock indices closing on the highs today, it's indicative of the fact that on Monday open, we're going to have a bullish continuation in risk assets, meaning stock indices or crypto. The last time sentiment was this negative in the markets was at the bottom of 2020 during the corona pandemic. So we're getting up there where it's starting to make sense to start looking into the fact that you might start buying a few assets here and there for long-term hold. In any case, let's dive in and see what Mr. Diamond Hands has to say for the crypto. So let's take a look as to why you should be buying blood on the streets, because the last time we had put to call ratio this high, or at least approaching the highs, was in 2020. And remember what happened in 2020? We had a massive rally afterwards when most people were still predicting the end of the world. All of a sudden stocks were starting to pump. Obviously the Fed started providing liquidity. However, even now you should be wary of the fact that everybody is positioned on the other side, meaning super bearish. Now let's take a look at the articles I mentioned. So here's Goldman Sachs buying Celsius assets for $2 billion because, like I said, they're not doing it because of the kindness of their heart. They think that it's simply an investment opportunity for them, and they will get a nice return for their investment. Same thing with the Sam Bankman-Fried of FTX. He bails out crypto firms, etc. Again, it serves them in twofold. First of all, it kind of puts a stop on the panic and the contagion of spread of aforementioned panic into other firms. So they're containing it. Meanwhile, providing investment for these companies, which I'm sure they will take an arm and a leg for in return. So let's take a look at what's happening with the stocks, and then we'll do crypto, because this weekend is, I think, is going to be very interesting for crypto. Now, as you can see, this is we've been saying to buy this dip in stock indices all of last week, and we've been trading for the long side. Obviously, made money, and we're closing on the highs. Whenever you have a Friday close at the extreme level, usually there is a follow-through next week, and if there is a follow-through in risk, that means that stuff like Bitcoin and Ethereum will also benefit from it. So let's take a look at Bitcoin and Ethereum. They're all looking pretty much the same. So one of the bottoming patterns is known as head and shoulder. So this is shoulder, head, and shoulder. This is the neckline. Once you break the neckline, you usually you have a measured move towards this profit level. So after a cascading waterfall of sell-off like this, a little bit of a pullback again to, so this is, if you take a look at the Fibonacci here, pulling back to 618 around 20, right above 26,000, or at least somewhere around 23, 24,000 level is not something out of extraordinary for Bitcoin to achieve. So if risk is going to get a little bit of a relief rally, I think that this thing might go up as well, at least in the beginning of next week. So, and this weekend. Why this weekend? Well, the 20,000 level sell-off occurred exactly on a Saturday at 2 a.m. New York time last weekend. Why? Well, because there was thin liquidity. So they wanted to flush out newly established longs around just above 20,000. They flushed them out, liquidated them. I think the articles pointed to the fact that it was one of the largest liquidations in a while. I don't remember how many billions of dollars. So basically, people got taken for the ride who were trading it on margin. Now, same people said, okay, fine, this thing is not, it wants to go down. We're not going to be buying anymore. So now that they're not buying and they're actually starting to sell this thing, their stop losses and liquidity, go back, their stop losses are above these points right here. So above 22,000. Once we start trading above 22,000, I think we're going to have a squeeze, a short squeeze. A short squeeze is when people are just scrambling to cover their shorts because they see a massive bullish price action happening. And again, why the weekend? Well, because there's everybody does everything but trade on weekends. So since less participants, it takes less money to move the market one or the other direction. So last weekend we've surprised the bulls, and now we're gonna surprise the bears. So everybody gets taken to the cleaners, and that's what markets do. They're very efficient in transferring most amount of money from most hands to a very few selective people who understand this game. So one of those things is that everybody gets taken for the ride, and I think this weekend it's going to be the newly minted shorts, people who are still sitting in the short positions on margin, and now they're going to get a squeeze. Now they're going to get liquidated, and that squeeze can easily take us to at least 23,000 to 25,000. So not a bad way to make some scratch over the weekend. And let's take a look at ETH. ETH actually is pumping even better than Bitcoin. And for ETH, my target is the previous all-time high at 1420. So there's 200 points in there. Again, on small leverage trade, not bad. And I posted this when we were somewhere here. Well, on this bar right here. That's why the arrow is pointed here. So watch for the breakout, buy the breakout, and enjoy with stops around just below 1,000. So you risk 200 points, you make 200 points, 1-to-1 ratio, risk to reward ratio, not bad here as well. So again, to summarize, when everybody, so back in the day when we were all cavemen and lived in a society where everybody saw tiger, they would immediately rush the opposite way. We still have that lizard brain response built into us. So when we see fear and panic on the streets, most people actually give into their emotions rather than realizing that they shouldn't be. So they shouldn't be selling something that's worth $100 for $30. Basically, if your house is worth $100,000, why would you want to sell it now for $20,000?
you shouldn't. It makes no sense. Unless you really are desperate and need some money, you shouldn't be selling those assets. You should wait for the next cycle to offload them. And that's exactly what bankers are doing, like Goldman Sachs and very savvy financiers. So they're buying assets when there's a panic, and the emotional panic of unsophisticated players lets them buy. Well, they sell pennies on a dollar basically, and 5 years down the line, these assets worth 5, 10, 100 times that they're worth right now. So it makes very little sense to it makes very little sense to give into your emotional state when everybody and their mother are talking about the end of the world. Usually the opposite happens, and that's what this thing, this chart was telling us in the beginning of the video. That basically we're approaching maybe not the bottom, but getting close to at least, at least we're setting a temporary bottom, as I've been saying from last week, that we are going to set a temporary bottom and start rising. And that's exactly what happened this week. And now I'm telling you that the opposite is going to happen. We're gonna squeeze a little higher, meaning not the opposite, but that we're gonna continue with this move, and we're gonna squeeze a little higher, in opposite of what everybody else expects right now, meaning they all expect this all to crash and burn, and blah blah blah. But most likely, at least temporarily, we're gonna have a little upside in all of risk assets. So hopefully this will make you some money this weekend or next week. As always, if you'd like to chat about any of this, check out the link in the description page for our Telegram group. Please like, subscribe, leave a comment, as it helps the algo pick it up and distribute this to other people who might find it helpful. So we would appreciate it as well. Hope it helps. Enjoy.